Hey guys, a very good morning. Fabio here. In today's video, we're going to be doing a trade breakdown on euro dollar utilizing supply and demand, liquidity, order flow, and market structure. So if you guys all trade this is going to be a great educational video explaining all of these basic concepts. So with that said, let's dive in and have a look. So starting off with euro dollar over here, we're in 2021, pretty much all the way in towards the end of the year. So what I want to do first of all is just draw a market structure to give you guys a real comprehensive understanding of how I utilize it in my trading strategy. So let's say this is a swing high. Let's just start over here. This swing high gets broken by a swing low, right? And the swing low is the lowest point which caused a new swing high or a new higher high, which is this low over here. So this is my swing low. Then what happens, we see a push in towards the highs all the way in towards here. I wouldn't really consider this a pullback, but at this stage within the market I would say this is a pullback. What happens, we see another break of structure, but then what happens, the lowest low, which is this low over here, which caused a break of structure, so a break of this high over here, is now broken over here on the 15th of January in 2021. What we then see is a pullback once again, then another break of structure. Then what happens? Another break of structure over here on the lows. A lot of you might wonder, okay, well, Fabio, why is this not a break of structure over here? Because we see kind of like a break of this high. Well, for me personally, new higher highs or new lower lows are only established once we see a close above that low or close above that high. So in this specific situation, this is just a liquidity grab of the overall high over here. So what we see is, of course, liquidity grab, then push down, pull back, and then push down again. So we saw another break of structure on this low over here. So then what happens, another break of structure on the high. This is the high to break because this is the highest point which broke this swing low. So then we see push, we see a pullback again, of course, pull back, push up, and then we see, of course, a pullback. But then what happens, the lowest low, which is this low over here, which broke this high, is now broken, meaning that this is now your swing high over here, because this is your highest high which broke this swing low. So this is your high, this is your low, then this becomes your high, and then of course we continue towards the downside. So let's just draw those lines in for the sake of it. So we see, of course, push down all the way in towards here. This I don't really consider a pullback. This for me was just kind of like choppy price action in towards the downside. So we saw a break of structure over here. This becomes your new swing high. Then this becomes over here your new swing low, swing low, swing high. So that is pretty much the trend drawn out for you over there. So now looking at supply and demand, we of course can implement, and if we just focus slightly more on most recent price action, we can of course see that this area of supply pushed price down, and we have seen price push down ever since pretty much, right? Now looking over here, what do we have? We have a daily break of structure. And what do we expect after daily break of structure? We expect a daily swing pullback, right? Doesn't matter where you are after that break of structure. After break of structure, we expect a pullback because the trend, of course, in a downtrend looks like this. After break of structure, price will pull back. After break of structure, price will pull back. So this is currently what we're going to be looking for, right? After break of structure, we look for that pullback to then eventually capitalize on a new potential lower high to then trade your dollar further in towards the downside. Now we do see a potential pullback incoming. Why is that? We see this choppy price action, right? Most of the times when I look at market structure, I look at order flow, what I can really see is that once these swings kind of become smaller, and what do I mean by swings? This is like a big swing down. Then we see a minor pullback, minor swing, minor pullback, minor swing. So once it kind of becomes a little bit smaller and we kind of like squeeze in towards the lows, that is kind of like the moment when you know, okay, we do have a potential pullback incoming. Because also if we look at order flow, and order flow is just really looking at the buys before the sells and the sells before the buys. And what do I mean by that? Well, for example, this is your sell before the buy, or the buy before the sell. This is the buy before the sell. This was your buy before the sell-off. This was your buy before the sell-off, and every single time you can pretty much see that we do react to these points within the market. Especially if we look in the past, what you'll obviously see is that this over here is your sell before the big buy. Price comes back in towards that sell before the big buy, moves back out again. Then again, this is your sell over here. This entire range, pretty much from this high all the way down towards this low. This is your sell before the big buy. Price moves out. price moves back in, and then price moves back out again. So that is pretty much what I'm looking at over here as well. And what I can see over here is that this buy before the sell-off works, because we see like the tap over here on the 8th and 7th of October. We move back in towards that buy before the sell-off, but then what happens on the buy before the sell, which was created on the 8th of October, that one fails and we see close above, meaning that we can now potentially anticipate that there's a pullback incoming, especially due to the fact that we of course saw that daily break of structure, and we already have seen a big drop past that break of structure point over here. So these are all kind of tail signs that there is a potential pullback incoming. And now if we look at market structure itself, what can I identify within this piece of market structure, right? So what I have over here is a daily bullish change of character, plus of course that supply fail. So this area of supply over here failed. So this buy before the sell, that failed. So that's kind of confluence point 1. And then next to that, we have a change of character, because this over here, this high, this is the high which caused a break of this low. So this is then your daily change of character. So inside of that daily change of character, what we then potentially have again is pretty much demand created inside of this, let's say, sell before the buy. So what previously was your order flow, your bearish order flow, so your buy before the sell, is now your sell before the buy, because this sell before the buy has caused the price to kind of close above this high over here and create and establish a change of character. So these are the confluence points on the daily time frame. Just quickly looking at the overall daily time frame, of course, this is then one of our target points, or target point number 1. This is going to be target point number 2. Yeah, so I hope everything is now clear for you on the daily. So let's dive in towards the 4-hour time frame now. So looking at the 4-hour time frame, what can we see? Well, pretty much what I was talking about on the daily time frame is of course also visible on the 4-hour. I'm just quickly drawing in the trend for you all again. Looking at the 4-hour trend, what we saw was a break of structure. This was your high, this was your low. This high gets broken over here. So this is then your swing low, swing high, swing low. Okay, swing low gets broken over here, meaning that this then is your high, this then is your low, this then is your high, this then over here is your low, this is your high, this is your low, this is your high, and we can keep on going. This is your low, this is your high, this is your low. Yeah, so if we just look at the most recent price action and draw that market structure in specifically, what we can then see is that this over here was a break of structure, this over here was a break of structure, and then okay, so what is the point in price that broke this low? Because we can of course obviously see that we saw a close below this swing low. We saw a close below that swing low coming in from this point in the market. So this is the highest point, the swing high, which caused this swing low to break, meaning that this over here is your break of structure again. What I just like doing is just drawing these 4-hour dots on them just to make it a little bit more clear. So this is the market structure outlined. So now what we see is that we're seeing a 4-hour break of structure. We're seeing a daily change of character. We see a daily bullish order flow coming into the market, and we had that daily break of structure signifying that there is now a potential pullback incoming. So there's major confluence for longs coming into the market at the moment. So with that said, we can now follow the 4-hour bullish order flow and the swing trend, but we have to be mindful that we are playing the daily pullback phase. So the 4-hour bullish trend is likely to be short-lived, as the daily pullback towards daily premium supply is going to be made from here. So just drawing 4-hour supply and demand. So this of course is your 4-hour demand level stacked within that daily bullish order flow level. This then is your 4-hour area of supply located over here, from where we expect a potential pullback on the 4-hour to occur, right? Because now we've seen a 4-hour break of structure, but now that we're playing, of course, that daily pullback, it doesn't mean that we're just going to trade the 4-hour non-stop in towards the highs. No, we still have to be mindful that the daily is bearish, but that we're just looking to trade the daily pullback. And if you trade a pullback, so let's say a daily pullback, you always have to be more wary. So at the moment, 4-hour is bullish. I'm just looking to trade it in towards the highs, with this over here being my liquidity high. So this is an obvious swing high for liquidity. So this is also the high that I will be targeting. So now pressing play, let's see what happens. Okay, look, so what happens? we take out the liquidity high, we come in towards this area of supply, and we have now gotten a potential, or what will be a potential pullback. So now what you want to see pretty much to confirm that this is going to be your 4-hour pullback after a 4-hour breakout structure is the fact that we're going to see a 4-hour change of character. So the 4-hour change of character would occur on this low over here. So once this low over here breaks, what we then have is a potential 4-hour pullback. So now looking at the market, we see a 4-hour change of character, meaning that we can now look for a potential 4-hour short within this area of 4-hour supply over here. Because despite us, of course, looking to trade that daily pullback on the daily time frame all the way back in towards, let's say, this area of supply, price does not have to pull back all the way into there, right? Because at the end of the day, market structure is king, and we always just want to trade mainly using market structure. So it just means that this could already be the pullback before, let's say, establishing a new lower low. So just keep that in mind. But of course, it is favorable that we do see those higher prices. This is just something that you always have to keep in mind. So we're now looking to, of course, trade back in towards that area of 4-hour supply before then selling off potentially in towards that area of 4-hour demand, for then, for example, looking for longs once again, because we want to take longs from demand and we want to sell from supply. So looking at the 15-minute now, what can we see within the market? What I want to focus on is utilizing the 15-minute market structure. So if we look at the overall 15-minute trend, what can we see? We saw a push in towards the highs, we saw a pullback, push up again, and then we saw one more push down again. So if we look what has happened over here, is that we can see, okay, we have this 15-minute break of structure located over here. So this is a 15-minute break of structure, meaning that this then is your 15-minute swing low over here, because this is the lowest point which broke this high. So this was your high, this is your low, this is then your high once again, and then we establish a new low over here. Why is this a new low? Well, of course, we see a 50-minute break of structure located over here. As we can see, we saw close below that low, meaning that we have a 50-minute break of structure. Now, this is pretty much stacking up into the confluence for a potential short in line with that analysis on the 4-hour time frame. Because remember, on the 4-hour time frame, we have an area of supply located over here. So if we look at the 4-hour time frame, what do we have over here? We have this area of 4-hour supply. Now looking at the 15-minute, remember what I mentioned on the 4 hours, that if we trade back in towards this area of 4-hour supply, we can then potentially short in towards 4-hour demand before looking for continuation longs. One more additional confluence that you can utilize over here in this specific situation is the premium versus discount tool. As we can see, this area of demand is located inside the discount from where we want to look for longs. Now looking back at the 15-minute time frame, I want to actually take one more long before trading from this area of supply, because from that area of supply you want to be selling back down in towards the area of 4-hour demand. So drawing in areas of supply and demand, what we can see is, of course, that we have this area of demand which caused a break of structure over here, and we had this previous area of demand located over here which caused this minor reaction point over here. Yeah, so the 15-minute, of course, switches bearish to facilitate that potential 4-hour pullback before then pushing down one more time and then potentially looking for those overall longer term longs. So after a 15-minute break of structure, what do we expect? We expect a 50-minute pullback. These previous 15-minute unmitigated demand zones become reaction points for pullbacks. So this unmitigated demand zone is now a reaction point for a potential pullback back up in towards the highs. So now focusing more on the specific area of price action, what we have over here, we can start looking for potential long before looking for those longer term shorts. So what we have is a 15-minute bullish change of character over here. So this is the high which took out this low located over here. So we see over here is the 15-minute change of character, and this is the first sign that we might start seeing a 15-minute swing structure pullback, which will facilitate that 4-hour change of character bias of seeing 4-hour lower prices before looking for 4-hour higher prices once again. So enter on the 15-minute demand over here, because this 15-minute demand caused a change of character, and this is pretty much the same concept that I utilized on the 4-hour previously. 4-hour supply which was created due to the 4-hour seeing a change of character. Now we have this 15-minute area of demand which facilitated, of course, this change of character on the 15-minute time frame. So normally what I would do is I would just set my order on the top of this area of demand, set my stop loss below the demand zone, about 2 pips below. So let's just put the stop loss on 6 pips, and I would have a target of around 1 to 5, depending, of course, on where the supply and demand zones are located. In this specific situation, supply and demand would be located over here. So we have a supply zone over here, and we have our second supply zone located over here. So So what I would do in this situation is, of course, have this area of supply as my main target with a 1 to 5, but I would, of course, take risk off located over here, with this still being, by the way, an area of supply. So what I just do is that at these areas of supply, I take risk off. So this being zone number 1, zone number 2, zone number 3, this is pretty much the first area where I'm going to take risk off. So with that said, let's just press play and see where the market heads. Okay, boom. So we see a pullback. Still just missed my zone, but I'm still pretty confident that we are going to hit it, because of the fact that we saw a break of structure over here, or an internal break of structure, whatever you want to call it. So this is just a pullback back in towards this demand zone before then potentially seeing higher time frame, or continuation in towards the highs again, excuse me. So just pressing play again. Okay, boom, in towards zone 1. Okay, what we then do is, okay, look at zone 2, set stop loss to break even after, of course, hitting zone 1. We're now in zone 2, but of course the overall target is just below that zone 3. What we of course can expect is price to pull back one more time, but then boom, of course target is hit. So fantastic. This was a trade breakdown on your dollar, quick 50-minute trade. Personally, this is my pretty much trading strategy explained in a nutshell on how I look at the markets. Of course, there's a lot that comes with this kind of trading strategy. You have to keep an eye on the 50-minute, on the 4-hour, on the daily. Pretty much everything has to come together, but once you pretty much understand these concepts and take into account how liquidity works, how supply and demand works, how market structure works, and how order flow works, this really becomes a very easy concept which you can use on a daily basis. So with that said, thank you so much, guys. Wish you all a fantastic day, and we will speak very, very soon. Thanks, guys.